Okay, good evening, gentlemen. I'm sure there's some other people who might be joining as we start, so they can catch up on that on the when I upload this to the YouTube Clueless 8 YouTube channel. So good evening, ladies and gentlemen. This is Frank, Clueless 8 Trading. We have it's roughly 8 p.m. On November 6th, 2016. And this is a short, concise view of the current and market conditions prior to elections on Tuesday, the U.S. presidential elections on Tuesday, and let me get right into it. So what we're seeing now behind us is a fat move up on the SPX futures, which means the short hedges that I have, and I'm sure some of the other people have, in the morning, if the futures stay like this, are not going to look pretty. Okay, it's the nature of the business. You gotta have you gotta have hedge positions. Of course, you have your longs, which are in place, or at least limited longs, which are in place for most people. So those should help buffer some of the short-term shock or loss on the hedges, because futures right now are up roughly about 25 points. Now, some of you might not know, some of you probably are in tune with what's going on. The FBI is playing the song and dance game, as we know. They did that last Friday. They're doing it again now, and it's it's not that it's just random. They released it at 3:40 p.m., 3:36 p.m. or so this afternoon, that after reviewing the next batch of emails found on the device of Anthony Weiner, ex-husband of Clinton's aide, Huma Abedin, they have concurred that their conclusions from the July conclusions that they are not going to bring charges against Hillary Clinton stand. So in simple English, the emails were basically, according to them, they went through it, they couldn't find anything, and that's it. So the markets are having a initial burst of relief, and that's what we're seeing in the form of futures up 24 points, even though they're only at 2104. So the chart behind you, which I call the matrix, and I think it's drawn to perfection, except we don't know the exact timing of every little thing that comes up, because I don't work for the FBI and I don't know what kind of games they play. So the point is that Director Comey announced this afternoon that he is not going to bring further charges against Hillary Clinton. So that obviously that it's a sigh of relief in global markets and in the U.S. that at least the contestants in the U.S. presidential elections, the candidates, are going to be there will be two full-fledged contestants, and and then see who wins. All right, on Tuesday night, if not Wednesday morning. Now, what I'm going to explain to you guys is, of course, the technicals, but also a couple of game theory, political game theory scenarios, which I think might happen, which some of you have read, and some of you are, are my opinions on the complications that might occur, despite the fact that the initial so-called obstacle, or whatever you call it, that she might be indicted if the emails, according to the FBI, had produced something, would have caused a big wrench in the picture, in which case futures would be down 25, and the short hedges that we have would be looking very pretty. But right now they're not. It's the nature of the business. So saying all that, let me just zoom in. So here we have a picture of the market going back to January and February, Brexit, the sell-off in September because of rate, I called it the rate exit, where you had this huge amount of fear that the Fed was going to raise rates immediately, and all kinds of crazy stuff was happening on emerging markets. Fear that the U.S. rate hike cycle had begun, and we had this big drop, big move, all kinds of major volatility. Then we moved sideways for a bit, heavy volatility, and then this, which I call, sort of the initial, I jokingly called it the Trump exit, meaning that the fear that, if Donald Trump comes, the markets are going to pull back. Whichever the case, this was the latest round of moves, and there we are right now. So saying all that, the first thing I need to do is zoom in. Let's start off from the bottom. We had 9 days of consecutive selling. It has not occurred since 1980s. That's big, you know, and that's not a joke. 9 consecutive days of selling, and heavy selling. All right. So as somebody who's an eternal bull, which I'm not an eternal bull, I'm more of a tactical bull, but somebody who always thinks that the markets are going to go higher, so there are many people out there like that, not many, a few, then they would say, hey, 9 days of selling, everybody's, you know, so, you know, what's scared, the market has to go higher. Remember one thing about markets. I've learned this the hard way years ago, okay? Nothing has to happen. Markets can keep going down for 12 days, 13 days, because if you really think about it, every single day the market opens higher and then sells off in the afternoon. Didn't it do that for the last 9 days? So it's not like the market can't go higher. It's just that there are always sellers at these levels, right? So 9 days doesn't automatically mean, just so you know, from a market education standpoint, 9 days doesn't mean that it can't go lower after 9 days. So don't buy into that stuff. So what the whole point is, the internals. The internals do give us some signal, but remember, internals can also, as it did for 9 days, stay around the bottom and frustrate the crap out of everybody. Nobody wanted to be long. Okay, I mentioned a whole bunch of stocks that were working reasonably well. Chipotle is one of them. You know, there were a whole bunch of them. You know, Trip, the biotechs, Illumina, Regeneron. These were all winners, and there were some selective ER winners too. But no one wants to touch it. It's human nature, and human nature to defeat human nature. And I know it as a person because I'm human after all. Okay. Is the worst, is the most difficult thing you'll ever fight. The most difficult thing you'll ever fight in your life is yourself. Okay? It's not the market, it's not what I say, not charts, nothing, it's yourself. So the point is that the amount of fear and pessimism show up on the internals or the technicals in a very, very dramatic way. Just from a standpoint of where we were on the daily, and this is the daily we're looking at. So we're cutting out the noise of the 1 hour and the 15-minute and the 30-minute and the 4-hour charts. The bottom line is that we were deep oversold. I showed that clearly, and that's why those longs were put in place with the short hedges, which I repeat, if markets stay like this tomorrow morning, which it most likely will be, they're not going to look pretty. They'll lose 60% of their value real fast. Now, what happens on Tuesday? We have no idea. What happens Monday afternoon? We have no idea. What happens on Wednesday? Believe it or not, we do not have an idea. If Clinton wins, and I showed that before, and I'll certainly show that again. If Clinton wins, you will see a 300 to 400 point rally immediately. Just telling you what the markets will do. If Trump wins, then we will possibly come down and test the lower end of the scale. Nothing earth-shattering, but we'll probably come down and test the 2060 level or so, which I explained earlier, and we'll go over it tonight. And that's really as simple as that. And from that, the markets will stabilize. That's just what markets do. So saying all that, this is your daily chart. 24 points, 25 points higher right now. The relief rally is continuing because of the FBI announcement that they are not going to incriminate and bring charges against Clinton. So that part is removed. That factor is removed from the market, that uncertainty. Let's just put it this way. And there we are right now. Now, that's one heck of a move within the past, since futures open, Globex futures opened at 6 p.m. All right. So that's big. Let's see what we're seeing on the McClellan oscillator. And this is where your keen eye and your focus comes into play. I don't see any changes in the McClellan oscillator. Now, it's maybe because it's the futures market, But as far as I can see, with a move of 25 points, which is roughly an opening of 100 and I would say 125 to 150 Dow points, pretty big, right? Dow futures are up right now, I believe 100 some points. And so based on that, I'm not seeing any movement on the McClellan oscillators. Can't really explain that, but McClellan oscillators were very, very deeply oversold. And as we went lower, they actually stayed down here at that minus 225 level. I showed repeatedly that those are points of scaling into some selective longs, which I presented to all my members, all of you people. But again, what we do need to see, and you can track this in your own chart, it's not that hard, that on the daily, you need to see this shrink. You need to see this shrink. It's not rocket science, but that's just the way it is. During Brexit, which was here, during this period of Brexit, where we fell 1,000 points, and then we rose rapidly. 3 days in a row, we went up 700 points. You have to be very quick. You have to grit your teeth, hold on, take some profits, buy again, hold on. We did that stuff. Or you can just buy some and say, hey, it's going to repeat Brexit, and then hold on for 3 days. Don't even look at the screen, and you probably come up with a lump of profits. But you look what happened. This was obviously much faster. We went down to those levels. Not even, we were actually below Brexit levels on the McClellan oscillator. I showed that, I mentioned that several times in my charts. And because this thump was like one big thump in the middle of the night on Thursday night, and then Friday, and then we had that lower open on a Monday, and then he kept on going higher. So this moved very rapidly. Bottom line is that as you're starting to understand, or at least not understand, understanding is kind of passé. It's way past understanding time. It's practice time. So you got to look, you got to see whether or not these McClellan oscillators are shrinking. Once they start to shrink, and if you want the exact definition of the McClellan oscillators, excuse me, you please refer to investopedia.com to get the exact definition of that. In my understanding, it's basically oscillators are showing you the pressure of buying and selling. So obviously, if the pressures are very high and there are panic sells all over the place and large sells like we saw for 9 days in a row, you are going to see some heavy pressure down. So it gets pretty oversold. So you need to see this shrink. And as it starts to shrink, you want to stick with the long side of the trade. It's really as simple as that. So despite intraday volatility and all kinds of stuff that hit the market nowadays very rapidly, if the McClellan oscillator is shrinking, then you need to stay with the trade. And that's just the way it is. You need to stay with the long trade till it gets overbought. The first overbought signal on the McClellan is always around 100. You can see that. And then if you get really overbought like we did here, okay, after Brexit, then you get up towards the 200 level. At around the 200 level in the McClellan oscillator, it's just the exact opposite of being down here. The market can creep higher, but you know they're going to basically sell the market a bit, and they certainly do that right when it gets towards those levels. So that's basically it. It doesn't mean that it's going to hit 200 and immediately get down and get oversold again. That might take a whole bunch of days, as we saw during the Brexit period, and the same thing might happen. So let me get all these lines out, and let's take a look to see that this 25 E-minis up 25 handles right now, what it's doing to the actual charts. So let me zoom in here. And don't let all these precision lines, bother your eyes. But look at it carefully. So basically, what we did was we came back. This is where we are right now. We came back to where we were, and remember, markets follow these levels. These machines follow these levels. They're programmed in. So here we are. This was the low. Let me just get this arrow. Okay, this was the low and a massive reversal hammer of the 13th of October during the time of that mid-October massive volatility right there. Okay, looks like a cross right there. It's a hammer reversal. There's your tail and there's your hammer. okay, and then we went up again the following day. So that's a hammer reversal. What was the low of the hammer reversal? Exactly where we are right now as we speak on the futures at 2105 on the E-minis. Okay, it's no coincidence that it's hit that particular level, which was a major inflection point, and trying to hold it. Now let me get this line out and let me show you something. My channels were drawn. Let me go back to it again. My channels were drawn days ago. You guys know that. All right, so let me zoom in. So where are we right now? Yeah, you can make these things up. I mean, it's really, you start practicing it, you get better at it. Markets will not always cooperate with you, but at least you feel like you have an understanding what's happening in front of you. Nothing is random. Here was your upper channel. We broke this. So if it's channel 1, 2, 3, 4, we almost hit channel 3. Channel 2, inverted hammer. So from a technical basis, that's why I said let's go with the short hedge. The short hedges did tremendously well on Friday. Some profits as needed to be taken out, and the core position left in there. That's just pure trade management. I gave those things. They were up 70%, 80% within 2-3 hours. As I was doing the free market update webinar at around 3 o'clock, I believe, on Friday, this was going on. The inverted hammer and the heavy selling. Right there, the SPX puts were up, and the UVXY or so were up anywhere from 60 to 70%. Not bad. In fact, pretty damn good. All right. So it made sense looking at it from a technical standpoint. Please focus on this hammer here, this inverted hammer, that it looked like the market would basically continue its downward trend a bit. I'm not saying that it's going to crash and burn, but I did think that maybe we would open down about 10 S&P points or so. Worst case scenario, 20 S&P points. Believe me, if Director Comey of FBI had come out with the opposite statement, that they are looking to bring some criminal indictments, or not even use the word indictments, but some possible criminal charges, the couch it in diplomatic language, the markets would be down right now 20 S&P points, if not more. All right? But he said the opposite. So and isn't it weird? I mean, not weird. You got to understand this. This is how the game works. Life is rigged. The game is rigged. Don't ask for fairness anywhere. All right? So the point is that he did it right late afternoon, knowing very well that the markets would open, the Globex futures markets would open at 6 p.m. Eastern Standard Time, and he did it roughly 2.5 hours before. Bang! So the futures traders, the ones who are heavily short, far shorter than we are, because everybody's heavily short. Okay, you look at the sentiment indicators, I showed you the internals, they're blasted out right now. Some small hedge fund who basically took, all their money and went fully short are right now about to get blown up. That's exactly what's going on behind the scenes. Billions of dollars worth of E-minis that are out there, which are fully short, right now are just, they're, what am I looking for? They're looking for adult diapers in a bad way. All right? It's a very scary thing. E-minis up 25 points, could be up more, is a very scary proposition for futures traders who are heavily short right now. Not a good thing. All right? I'm not feeling too good on the short hedges that I have in place tomorrow morning, but it's not going to be like, end of the world. They are hedges. Hedges are meant to be positioned against your long positions. That's why they're called hedges. Reminder, saying all that, here's the upper end of the channel, okay, which was drawn based on these tails, straight line, and these are all parallel lines. This is exactly where we are. And it looks like we have a green doji. Now, where is that going to take us? We have no idea, to be honest with you. These are from a daily perspective, it's certainly telling us that the market wants to go higher. You can see that clearly. Okay, these are starting to shrink, even though they'll probably shrink more when the market opens on Monday. We have 9 days of selling, so you could have a big relief day on Monday based on what happened this afternoon, and you can start to see the green candle appear. Imagine if this green candle matches the 2 million contracts or so that were traded on Friday. I mean, that would blast the market up 300 points, right there before the elections. So saying all that, the upper end of the Darvas box, you have to rely on these strategic indicators and not make up numbers in your head, okay? Is also where we had the last supply zone or large candle selling. After we had a doji, it looked like it was going higher, and then the market did go higher. Try to enter this uptrend line. This uptrend line, it's a key line here. Every line here has a hidden message. In fact, it's a visible message. Okay, it's not rocket science to figure out that this is an uptrend line that I've drawn. So going into that uptrend line, as we did on the 1st of November, but we failed to hold it, and then you had that huge candle reversal. So the upper end of the Darvas is exactly that. This red arrow is generated automatically by Thinkorswim, not by me, and there we are. So we are the upper end of the Darvas is 2130. So translate that into your SPX, roughly around 2136. We do not enter, and this is all mathematical, and you see how precise this is. We do not enter the uptrend line. Remember, this is the uptrend line, this blue line here. We do not enter, and these are static lines. They're not dynamic. They're not changing every day. Those lines are static. The dynamic lines are the indicators. These are the lines that I have drawn to put a body on this random pattern, because this is pretty much a random pattern. You can't put this pattern in the framework of a particular structure and say, oh, that's a falling wedge, or oh, that's it. You can't. This is pure volatility. Pure volatility. It was looking like it was turning out to be a dragon bullish, and then everything just went into the gutter starting the 25th of October. This massive waterfall decline, right? So till here, there was a pattern. After that, it was just like, okay, here it looked like it was creating a triple bottom. I showed that too, like here, right before the month end, right before Halloween. Didn't work. This came in and just shattered the whole thing. So you have to rely on these different lines and the different support levels at that point and not look for patterns anymore. So looking at this here, we're resting here, 25 points higher. I know JP just entered the room. JP, you can hear the first part of this thing. We're talking about what's going on here. So, you can certainly listen to the first part of this webinar, free webinar on the YouTube channel when I upload it tonight. So here we are. So looking at this here, at least on a daily basis, is telling us that we're going higher. Now, what's the biggest fly in the ointment, or the biggest variable that's controlling every single move here? It's elections, Tuesday. I've gone over it a bunch of times, and you guys pretty much the outcome is binary. Clinton wins, we're going to have a rally, which they'll probably sell a bit, but I don't think we're going to retest the lows. Trump wins, we're going to go down, and then we're going to recover from there. Where we recover to is the question. We don't know yet, because it's not just us. We know what he wants to do, and in whatever he's going to do, he's going to put a strong cabinet together, and he's going to basically get things going. All right, but it's the world markets. When they get way too nervous, they start selling. Obviously, it has a very negative impact on the U.S. markets. That is the unknown. I don't know how the emerging markets are going to react, how the dollar is going to react, how certain asset classes like oil is going to react and stuff. We don't exactly know. So that is the biggest unknown on the uncertainty about what might happen if Trump wins. Aside from that, if it was completely up to us, which is not, it's a globalized world, we're all interconnected, then we would recover rather fast and move faster. saying all that, this is where we are right now. Okay. Now, I've said it before. The markets always mean revert. All right. And it's not me saying, that's just the way it does. How it exactly, how fast it does that, I can't tell you. But given the volatility, it's going to be fast. So the mean reversion happens to be in the zone of the 2145, 2150, this zone. This is your mean reversion zone. Okay, where you have the 34 and the 50, which, by the way, had a negative crossover here, but there was a lot of 200-point days. But if all failures happened at first at the 50-day moving average, and then at the 34 moving average, and then it just went berserk. The movement from here to down here is, I would say, the standard deviation, and that's just to remind people, the moving average is the highways that you're driving on, right? So if you're completely off and you haven't, you fall, you go over the ditch and you're like landing up somewhere way out there in the desert, right? See those bachelor party movies, right? That's what they do, right? The car just veers off and lands up somewhere else, miles away. So the point is that the standard deviation from here to down here, I'm guessing, is a good -7, -6 or 7. That's an extreme. That's an extreme. But extremes can get a little bit more extreme. That's what I was trying to explain on Friday. And again, to repeat, Mr. Director Comey's statement this afternoon that he's not going to bring new charges against Hillary Clinton obviously is causing this global relief rally that we're discussing right now. So here we are. So where do we go from here? From a technical basis, the biggest unknown is Tuesday. We don't know. So we have to look at a closer picture of whether or not we are technically overbought and where we are on a shorter level. On the daily, before I leave this chart, we are certainly not overbought. No question about it. And if we didn't have the big question mark about the elections on Tuesday, this would be the biggest buying opportunity you would have gotten in a long time. Because these are the points of maximum entry. Hold your nose. And that's when the normal standard crisis situations, junk bond yields shooting higher or oil prices going falling or this and that, not a political variable in the equation which cannot be determined. That is a black swan event. It's unquantifiable. And that's why I'm not BSing anyone, and that's why I'm just telling you what I think, is the game theory aspect of it and what the scenarios are. Otherwise, I would say buy the crap out of the market right here and basically just it's going higher, because this is definitely looking like it's gonna under normal technical circumstances. We are not under a normal time because we have the elections on Tuesday. So saying all that, do not be surprised that this doji actually, by the time, let's say in about 3 hours or so, if somebody's watching, somebody can have the futures open, look at it in any one of their screens. I have a little old iPad mini, the first one that my son had for all these years, and he just got bored of it. He's just moving on to, he's got other more, I guess he's used to his Mac and stuff right now. Stays on, and it shows me the futures. I wouldn't be surprised if this turns red, and that would certainly be a negative signal. So so let's go back and let's look at the 4-hour. So on the 4-hour charts, let me zoom in. On the 4-hour charts, we have a reversal tail. Let's zoom in so you guys can all see it. When the 4-hour gets overbought, and this got overbought in about 3 hours, because the future started trading 3 hours ago, we hit this precisely. Okay, this downtrend line, which I had drawn days ago, and every single time that the market has hit that downtrend line, what's happened? We sold off. Okay, so for the short hedges that are in place right now, is it a lost cause? Absolutely not. Absolutely not. Because if we have whatever complications that may arise during during Monday and Tuesday, remember, if Comey hadn't come out with that statement, I repeat, this afternoon, giving a you know, what's it called in Monopoly? Get out of jail free pass, right? For a better choice of words, get out of jail free pass, because that's what he did this afternoon, right? He passed on the get out of jail free card. And in Monopoly, if you guys have played it, then this wouldn't happen right now. We would be looking at the lower end of the channel, which would be around 2060. So saying all that, every single time it's hit the upper end of the channel, and these were pretty powerful moves, 100 plus type of moves, we've sold off. So is it possible that we sell off again? Sure it is. So if that's the case, where do we go? So so from a technical standpoint, the 4-hour is getting overbought. Every single time the 4-hour spikes, please look on the right side, into that 95, 98 range, close to the 100, okay, you have a subsequent sell-off. That's just a given. A technical reset, always. For whatever reason. You can look for reasons, whatever, But so that's why it's very critical to keep an eye on the technicals as well as the macro news and the noise that's flowing out there. And of course, your gut feeling about what might happen, this and that. Just by looking at price alone, as I like to remind people, is not going to serve your purpose in these type of markets now or going forward. Believe me when I tell you. So here on a 4-hour, we are certainly overbought. The 50 simple moving average on the 4-hour chart is 2114. That translates into about 2120 or so on the SPX right there. You can see that. I would go heavy long the minute I see this 4-hour chart starting to change the downward direction and starting to point up. It's really as simple as that. Because technicals precede fundamentals. That's an old story. I mean, that's an old saying. They will always come ahead of what the fundamental news and the noise is out there. If these lines, if these two lines, the 50 and the 34, which I'm sure you track it on your screen too, all of you, are starting to curl up, I don't care what the news is out there, that means this market is going to jettison higher. Okay, period. But it's not doing that yet. It's still pointing down, and we are resting here. So without spinning too many stories, if we get overbought the 4-hour, you will get a tactical reset. I am 80% right or more, and you've seen that happen over and over again. We played that tactical reset game on Friday, and it worked. And we have played it on other days. It works. I use this, and I use the quad platform, as you all know, and I post out those charts on a regular, every half an hour or so everyone can benefit from it and track it and do and act on it and make money or do what they need to do. If we get overbought up here, you will get a pullback. Now, that's the high probability trade. Is it possible that it gets up here and stays up? It sure is. It did that here. That's a low probability event. My gut feeling tells me, as common sense, that the day before the elections, the markets are going to be, will use this opportunity to take some nice profits and scale back. How much it scales back, we have to look back at the 1-hour chart. Okay, because the 4-hour is the closest thing to a daily, so it's not giving you too much other than telling you that it's moving in between the channels. And this is where we are. If we break out over the 50 SMA on the 4-hour, which is roughly over 2119, 2120 on the SPX, and it continues forward, then we are going to hit that 2140 mark on the S&P, which translates into 2134 on the minis real fast. That's only if we break above that. And I'm scanning this all the time and posting it up there. So do take do use that as a tool to track that on your own screen. Let's move into the 1-hour right now, because it's the S&Ps that's really controlling the markets right now. I'm telling you right now. It doesn't matter what I think or you think. It's the futures that's controlling the markets, period. And of course, that's driven by elections and all that stuff. So look how symmetrical this thing is. Here's your channels that the market was traveling in. Just adjust it a little bit. Oops, sorry. Oh, it decided to run away from me. So let me just put that up. Duplicate drawing. Guess it doesn't want to. Bear with me one second. In the meantime, if anyone has any quick questions, I'll be happy to answer that. So I'm fixing this stuff here. All right, looks like it will just be as. I guess I'll go back on the daily and then try to draw this channel. Duplicate drawing. Look, anyone can do these drawings. The more you practice it, you'll be amazed how perfect these lines are. So here was that channel that we were traveling in before we completely broke down, right? Channel 1, channel 2, channel 3. And in times like this, I like to use these channels because it's all range trading going on. So that's the reason why I use these channels to show people and somehow try to do the right thing on my side. So yeah, so Jeremy asked the question is, if we go up to 2134 tomorrow, then Trump gets elected, how low do we go? I covered that the first part of the session, but I'll cover it again before we finish, JP, okay? So we know where we stand. So again, there are no perfect answers to that, like exactly how far we're going to go. The question is, how much does he win by? Does he win a huge mandate? Wins the large amount of the popular vote and a large amount of the electoral college? So it's all kinds of different questions, not just one thing as to, okay, if he wins, how much exactly? Roughly the tactical levels that I've shown and what all my advanced readings have people, some of the technicians that I respect, some of the articles that I put out there, 300 to 500 points, basically 300 to 500 points. I'd say more like 300 points. So somewhere between 300 to 500 points, almost like an immediate thing. But remember, that's going to happen like pre-market. I mean, that's going to happen overnight on Tuesday night, right? Friday, Wednesday morning. So we could already have the correction, believe it or not, before markets open on Wednesday. So just keep that in mind. All this is Globex stuff. So looking at this channel here, you can see we're doing that, and now we exactly hit that. I'm serious. You can't make these things up. So you have, this is really funny. My iPhone 7 Plus has been lying on my desk because I just haven't had time, a lot of stuff going on to really do that. All of a sudden, the Siri woke up, and it's Siri. It's as if I'm asking Siri. It says here, I don't know what you mean by I'm Siri. I can't make these things go up. I can't make these things up. How about a web search for it? This is too funny. It just appeared, on my desk as my iPhone 7 Plus is lying there, and I'm still using my old iPhone 6 Plus. And I was just like, what the heck's going on with this thing? Yeah, it's talking to me. It's scary. Anyway, weird things are happening. Sorry about that. Okay, so here we are. Now, every single time I repeat, we've hit that. Every single time we've hit that, and this is prior to the FBI release that they were investigating the emails. That was last Friday, right? Here, we had a big move down, and then it came out, okay, it was Huma Abedin's laptop, not hers. The market reverted back. We played that, as you know, and then everything gave in the following Monday. So every single time, just from a pure technical standpoint, we've hit this level, the market's pulled back. Is it possible that it's the same thing tomorrow? Could. It could. Because, and I'll show this to you clearly, so you guys decide on your mind whether you believe in technicals or not. Look at the standard deviation. Just focus, please. Look at this. These are the 50 and the 34 moving averages, right? Crossing down. Whichever the case, just look at this. Look at the distance. 1 second here. Let me show you something. First of all, we're getting overbought. Right there, we're getting overbought. So if the futures open up 25 points, higher probability the market's not going to keep running. There'll be a good amount of profit taking right off the bat. okay, right off the bat, because uncertainty of Tuesday will act as major psychological resistance, in my opinion, on any major pop-up on the market, period. So saying all that, let's try to figure this out on a technical basis. So on a technical basis, these channels are pretty explanatory. We have, look another thing that I look at. Look at the moving averages and look how fast we have moved now from the moving averages because of this pop-up right now after hours. That's pretty big. The standard deviation on this move up is probably around +3. That on a 1-hour chart is considered severe overbought. I repeat, that on a 1-hour chart is considered to be severe overbought. You can see that also on the so if that's the case, then you could very easily come down and retest, and this is a 1-hour chart. It's very easy that you can come down and retest 2090, 2090, or even 2085 before you make another move higher. So for people with the hedges like myself on the short side, the limited hedges that we have, who are caught in this after taking a small amount of profits on Friday, big move, we saw that, but still majority of that running overnight on the hedge side, short side, we will have an opportunity to minimize the losses, if not maybe even make a profit, if the market decides that it wants to come down and retest this channel again. Testing back 2080 might be difficult, which is, you know, the market's closed at 2085. Testing 2080 or 2070 on the SPX might be asking for too much on a pullback, but believe me, in this market, anything can happen. The lower end of this channel, and this is 2064. If the Comey announcement hadn't come out at 3:30 this afternoon, we would be sitting here right now. We would be sitting here right now. I am almost 80% positive. Okay, because it was a reversal hammer on the daily, inverted hammer, and it was going to go there, but it went the other way, which means it went to the upper end of this channel. So we're basically channel surfing here, period. So here we are. I wouldn't be surprised one bit if we come down here and keep on surfing this channel 2 and channel 3. So that is my opinion based on what might happen at the opening tomorrow. Looking at the 5-15 minute is right now is kind of useless in the sense that the 5 minutes and stuff is a lot of noise. But if you do want to look at it, look, this was the sell volume, okay, from 2:30 onwards, and I alerted people to go short right around there, right around there, and then we had a rapid sell-off from being up 60, up 40, down to being down 40, and that caused, and now this is what we're seeing in the future. So if you look at the future side, of course it's after hours, the volume, the first volume is always the short covering volume. That's the automatic algo that goes through. That's roughly 30,000 contracts immediately got blasted. That's a short squeeze. That's like a hedge fund if or a couple of hedge funds who are heavily short just went literally belly up. All right, right there, 30,000 contracts and 25 points. So, and this is where we are. So looking at the 5 minute or the 15 minute, to me doesn't serve any purpose. I'm looking at the 1 hour charts, and again, the pattern, if somebody's just looking at pattern, we can go as high as 2130, which is roughly around 2135 or 2136 S&P. So let me not harp on that too much. The bottom line is that when I look at the daily, let's go back to the SPX now. Now remember, individual stocks, a lot of them, even the ones in sectors which have had great earnings, like Expedia, price lines tomorrow after the close. There's no way to tell price time, but we'll look at it. Okay, I showed some great charts on where it might go or so, but price line being the largest behemoth has advantages and disadvantages. And the advantage is that they are spread out all over. Bookings.com, the biggest online bookings hotel operator in the world, is owned by Priceline. So if they see weaknesses here and there because of all the terrorist incidents around the world, then obviously that's going to show up on Priceline's earnings. You know, Expedia doesn't own Bookings.com. So the point is that the bigger you are, sometimes you have some disadvantages because those numbers might show up. However, if you look at the overall sector, they have done well. And despite everything, and if Priceline does do well, we'll look at it. It could easily be a $50 to $100 move or higher, in my opinion. Here's your SPX on the 15-minute. Looks like total crap. Excuse my French. And looking at the daily, it looks like, and this is what I kept on showing people, that we had at this point it was a total reversal hammer. So putting a hedge would only be prudent, but prudence doesn't matter because when you have, you know, these type of events such as what we saw this afternoon with the FBI announcement of the non-indictment of Clinton, and looking at this here, only thing that I can draw is this level here, which is 2070. That's really what I was hoping for tomorrow morning, to be honest with you. Okay, right, this big inflection point, this big reversal hammer, that's what was looking very, very likely. Saying all that, somebody said, what about the internals? Well, what about the internals? The internals look like crap. All right, and the why? Because they were just pointing down, straight down. There was no sign of a reversal. There was no movement, you know, showing that we would basically open lower on Monday. This was the only thing that's telling us the McClellan oscillator, after getting jammed big time to almost down below minus 200, and I showed that. And that's why selective longs are important in this market. You have to be selectively long in certain stocks. But the SPX was showing some positive divergence here. But looking at the internals, looking at the stows, this was a broken stow, meaning, and under normal circumstances, it would basically meander around a little bit before it started to turn. And that's when you would be a buyer. So I would be a very willing buyer. I probably am going to be right again tomorrow, to be honest with you, because the market could sell off pretty hard tomorrow afternoon, you know, as we get into elections, because it's a very tight race. We all know that, right? If you're following it, you know, Trump's gained ground in a lot of blue states that are kind of, you know, going red, going Republican. He's gained a lot of momentum over the past couple of days. So we'll see. So the point is that I wouldn't be surprised if we go up first. This moving average, and this is something really important for all of you to watch, please. If you're trading the market, you got to do it. This downward sloping 5-day SMA, unless this turns higher, market's going lower, short term. Even though we are way down, the standard deviation is pretty wide off the moving averages. This yellow line, okay, it determines the fate of the market on an intraday basis. This one, right there. 1 second. And try these things. You know, they work because this right there. So that line is 2101.52. We're at 2106.75. So we are right here right now. We are right above that line. So let me just draw that. We are right now, we're at 2112 on the S&P. So we're right here. With the E-minis up 26 points, this is where we are right now. Is that a trend change? Nope. Is that a big short squeeze? Absolutely. So this is where we are. This is where we are right now. So let's draw this out, all right? Let's try to see what might happen. So if this line, in my opinion, is going to cross over very fast, and then here's the upper Darvis at 2131 right there. And JP, you were asking this question, 2131. We are going to turn the corner on the internals. That's when the real shorts start to get really nervous, okay? If this line, the 5 SMA, and you please put that on your charts too, the 5 SMA. I know a lot of people use the 9 SMA. I like using the 5 SMA. It's more accurate. If this turns higher, putting any major short hedges gets difficult. But given the fact it's going to be Tuesday, I will have a short hedge going into the election. That's just my opinion. Because it's not just going to be like who's the winner. I mean, it could be a hugely contested election, and there could be no clear-cut winner. If somebody doesn't win the 270 electoral votes, there's no clear-cut winners. Okay, and there's going to be a mess, and that mess means uncertainty, means the market will pull back again. So saying all that, watch the 5 SMA from a technical standpoint. If this starts to turn up on the daily, then try to track that. If candles in an uptrending market, candles stay above the 5 SMA, right there. Look, in a downtrending market, candles like to stay below the 5 SMA, and you can see that. Watch. Here's your 5 SMA, right? And look what all the candles are below that. So a trend change, if somebody says, hey, the market, has it changed, has changed its trend? Is it now on an upward trend? One of the quickest way to see it, ladies and gentlemen, pure technicals, is it needs to stay above this. Let's say the 5 SMA turns. The candles need to be above it. In other words, the 5 SMA, simple moving average, is supporting the move despite intraday volatility. Is that clear with everyone?
Yes, it is.
Yes? Okay. It's a simple way, but try it. It does matter. It does help. So here, despite all the volatility, right? The market, the 5 SMA had turned, and this was a very volatile time too. The first week towards the middle of September, and but all the candles stayed above the uptrending 5 SMA. It's a good indicator to follow. What gets really difficult is what happened between the middle, towards the end of September, where here you have the yellow line, the 5 SMA, and look what the market did. Boo! Just went up and down above it. Doesn't make any sense. And then it fell. Of course, there are other indicators we were tracking at that time, but this type of volatility, the 5 SMA doesn't work. Look, because all it's doing is going back and forth, driving people nuts. You're going long one day, the market's opening up red right there. So what we were doing, as you know, we were buying the tactical lows based on the quad platform primarily, and then we were selling as it was popping up. Is it that easy? No, but that worked. But generally on a inflection point where you have the SMAs, the 5 SMA moving like this, moving in a curve, okay? On a bad market, it stays below the curve, all these candles. In an uptrending market, it stays above the curve. It's really as simple as that. So do try that, and that applies to stocks too. So given where we are right now, let's see if the 5 SMA will turn tomorrow. Remember, the SPX is not trading live. The E-minis, the first derivative of the SPX, is what's trading, right? So this will probably be looking like this when the market opens. We shall see. Now, saying all that, if the question that JP asked, looking if there is a Trump win, and I've explained that on Friday too, so JP definitely refer to the Friday video cast also, you very well could test 1980 to 2000, okay, 1980 to 1990. So if you do the math, we closed at 2085, so that's, that's 90 points, and that's roughly about 500 points. So this is very doable. Now, is it possible that it closes this gap and makes a short-term bounce? Absolutely. Remember, a long time ago, not actually a long time ago, a few months ago, ladies and gentlemen, 2020 was a mark that we followed very closely. Remember that? 2020? Yes? You guys remember that? It was like, we talked about a lot. That was the mark that everyone was watching. 2020. So 2020 is a line in the sand for the market. So 2020 could be a major floor too. Or you got the 1980, you'll definitely get, in my opinion, you'll definitely get a sharp bounce. You might very well get a bounce like this, the Brexit type of bounce. So be ready for that too. And otherwise, if Clinton wins, we're going to go hit the 2150 level real fast. And that's a major downtrend line, right? That's a major downtrend line. If we break above that, we're going to make new highs really fast. But I doubt it. I think the market's going to hit this zone between 2140 and 2150 real fast, and then possibly break out. In my, I think just on the force of it. And remember, the highs in the market were here, so it's not like they were that far away from the highs. We're what? We're 100 points away from the highs. That's roughly 500 points, right? 500 to 600 points on the Dow. You could get that. You could get that. So that's really where we stand. I just wanted to give it a little flavor. And let's take a look at Priceline. It's on tomorrow evening. And I drew some terrific charts on Priceline that I put out there. So the daily on Priceline, have anyone noticed something about Priceline's chart? What does it look like? Someone tell me, what does this chart look like? It looks like very similar to charts that we were just covering. Okay? Doesn't it look like an SPX chart? Yes? Do you guys see that?
Yeah, it does.
No? It totally does. I just noticed it myself. Here's your Brexit. Here's your January, February sell-off in the markets. So this is like, I mean, really, this does look like a lot, at first glance, looks a lot like a SPX chart. Amazing. So saying all that, let's look to see where we are with Priceline. On a technical basis, deep oversold. Every time that it's deep oversold, it jumps up about 50 to 60 points. Every single time. Here it was a bigger run. This was Brexit. The stock ran like a monster. It went from 1150 to 1350 in 7 trading days. 200 points. 200 points. Created a nice consolidation channel and decided to go up another 100 points. It's a beast. All right. So how do we tame this beast? The way I look at it, and I'm pretty good with the Priceline charts, but let's see. Let's take this. Let's review it like we did with the thing. Let's look to see the positive. Definitely oversold. I like it. The last thing you want to do is buy Priceline when it's overbought. I don't care what the price momentum is. You're going to get smacked. So it's good that it's down here. It hasn't turned yet, but it's good that it's down there. This is conducive. You have a shrinking McClellan oscillator. Not bad. We like that. So this is good. This is good. Let's take a look at the price pattern itself. Multiple days of selling. 1, 2, 3, 4, 5 days so far. We've had actually longer bouts of selling in Priceline. This was in the first week in October. 1, 2, 3, 4, 5, 6, 7, 8. Wow. And this is where we are. So looking at this chart here, this obviously doesn't look good on a daily. The daily is an inverted hammer. Let me try to zoom in from Brexit till now. Let's get these lines out and look carefully. So looking at this chart here, it certainly looks like a double top, right? One top, two top. That's a double top. Where's your neckline? Right here. This is your neckline. The neckline on Priceline is right here. I'm going to give you the negatives first. So the neckline, it's starting to break the neckline at around the 1422 level. Right there. You can see that. That's a neckline. It's a you know, kind of a head and shoulder type of thing. It's a double top. And here's your neckline. And that's one negative. The second negative is that the Darvas box, some of you might have noticed this. You can see this on your screen, you probably see it better. The Darvas box is being pushed down. Does everyone see that right there? Do you see that?
Yeah, we see the red arrow.
Okay, and you on your screen, of course, you're going to see it clearer. So when you start to see the Darvas box getting pushed down, from my past experience, that means there's some major selling pressure in the stock. Because the Darvas pushing down means that it's possible that it pushes down more and you create a floor. The floor on Priceline, in my opinion, and please refer to my charts that I posted. I posted 2 very good charts with numbers on the Twitter feed on Friday. So please refer to that for interested Priceline players. The psychological number is 1400. It also happens to be the gap fill. There is your gap fill. When the stock jumped from 1300, it jumped 100 points back in August. It was around 1350. I'm sorry, jumped about 70 points. So there's your gap. There's your gap fill. Is it possible that it first hits the upper gap? And this can all happen in 5 minutes after hours. That the stock drops 22 points. Let's say the stock ends at 1420 on Monday, right before earnings. Drops 20 points. It can happen in half a second. Okay? So then you get, one second, and then you get another fat move up. Very possible. Is it possible that it closes the lower gap? If it closes the lower gap, that's a negative. That means the stock has dropped 70 points for you and it's at 1350. If it closes the lower gap, it's still a buy in the sense that you should expect to see a bounce of the move from here. But I'm not expecting that, but it can happen. Priceline has a implied volatility, checking that on my other screen, of 88 points. So do the math. Stock closed at 1422. So either it's, and this I showed on my other chart, so I'm not going to repeat that. You're going to pull it up and look at it. 88 points. It's either going to 1510, give or take, or it's going to 1334. 1334 or thereabouts is basically your lower gap, or it takes out a new high. That's what Priceline's market makers automatic, is showing on Thinkorswim. And you guys can see it. Go up Thinkorswim on the trade monitor where you have the option stuff. Just type in Priceline. On the right-hand side, you see a little robotic figure, and it says plus minus 88.05. Plus minus 88.05. Looking at the weekly, stock is almost oversold weekly. That's a positive. So upper end of the thing, upper end of the Bollinger is 1541. Drawing the lines. So it's good that Priceline sold off over the last couple of days. That's definitely a big plus. So this is how I draw it. I wouldn't go that far with this, so I'm going to skew the line, make it a rising wedge. There. What's the upper end of the move? Bingo, 1530. So roughly about 100 points, 88 to 100 points. And the lower end, the 50-day moving average at 1307. That's 122 points lower. I don't think so, but you never know with Priceline. The 34-day moving average, 34-week moving average is 1363. Mid Bollinger is 1403, which I think is more likely, but it's not. I don't think it's going to be a one-way linear move. I think first it's going to drop because nobody knows how to read the earnings, and the machines who read certain, algos read certain keywords. So they'll read some keywords, they won't understand it, they'll thump it, sell it, then move higher. Whichever the case, you can do different strategies. You can do a straddle. You can basically you need to protect yourself on both sides a bit, I think, with a long bias, or you can buy very few shares and wait for a 100-point move. Remember, even if you have 10 shares of Priceline and the stock moves $100 or $88, you just made yourself $1,000. So it's, don't sneeze it off. Be involved in one way or the other. Anyway, I got some family stuff going on, so I need to wrap up. And plus, it's been, it's been a little bit more than an hour, or an hour or so. Questions? I'll take a question or two. Anyone?
Can you put up the oil futures chart just for a second?
Yes, of course. Okay, so let's start off by looking at the weeklies. Pretty deep oversold. Personally, I think this is a major, this is one support level, and the next one is here. I'm sorry, what am I doing? I'm looking at call it. I know, I'm just like, hold on a minute. Okay, yeah, right? Okay, so here's your weekly oil. So let's start off with something that they don't talk about. Look at the weekly oil chart. Do you know how bullish this is? I mean, this is one heck of a bullish chart if I ever saw one. You got this massive dragon bullish formation. That's your weekly chart that no one's going to talk about. I mean, that's a very bullish chart with the upper end here, and then possibly higher. But that's a weekly, so that means it's, in the case of wall, that means it's going to take probably months and months. That's your thing. Now, let's take a look to see what we see on the daily. So on the daily, I projected the oil charts and I showed that, so it's still drawn in. This is the trading band oil is trading in, and I think this is the defined band. 43 is the lows. Oil's going to hold 43, my opinion. We have had consistent selling, and so if you look at a trading band perspective, big dragon bullish here, broke out above that, created a double top, fell hard, no looking back, straight down. 43 is the floor. If this is going to be the channel surfing stuff, it's going back to 49. Get it? So, and again, also you're well removed from the 50 and the 34, which are still moving sideways to higher. And just a retest of that is a good solid 4 points, roughly 10% higher than here. So that's, so from a perspective of, look how systematic this selling and buying is. I mean, it's pretty amazing, right? Look how systematic it is. It's just candle, marching soldiers, and then waterfall, like all systematic, all machines. And this is the trading range, 49. And oil's moving up a little bit. You can see that tick up. 49, 43, 6 points. Breaks out over that, breaks out over 52, then we're talking a different ball game. Okay, then we're talking a different ball game. This is a large inverse head and shoulders. Head, left shoulders, right shoulder, another right shoulder. See that? Yep. So remember, Trump wins, the energy sectors, oil's going to go boom, straight up $4 because he's very pro U.S. energy. Harold Hamm is going to be probably going to be the energy secretary, and he knows oil better than anyone else. And so the point is that the energy sector will get an immediate boost, in my opinion, right after on a Trump presidency. So that itself shows starting to show that. Now, it doesn't mean it's going to completely collapse on a Clinton win, but it is possible that, but then if the market rally is going to drag oil higher, so I can't really project 39. I would say this channel is the one you should be watching at. Jim, any other? I'm sorry. KJS, any quick question? All right. So let me do this. I got to upload this, and I got to just, I got to run because my wife, something's going on, so I need to just bolt. Let's get ready for tomorrow. We're 26 points higher right now in the E-minis. Stay calm. Remember, trend changes don't happen in one day. But given these type of markets, expect major volatility over the next 48 hours. And whichever the case, I think opportunistic trades, that's my opinion, opportunistic selected trades are going to do extremely well. So don't spread yourself too thin. Little bits at a time. You get a big move up. Just play that move. Use all the tools that I provide. Use your own gut feelings. Luck is always involved in the picture. We know that, and we should be okay. Price line, try to see what you can do with that on earnings. We've got a whole bunch of other earnings coming through also. Like I said, it ain't done till it's done. It's just going to go on. This is unprecedented what's going on. It's whipping technicals around like it's no one's business, but we're still trying to make sense of it. And I think all the stuff that I do will certainly be of great help. I'll see you guys tomorrow, and thank you for listening.